Welcome to Stock Shotz. Today is Thursday, March the 26th, 2009. Our guest today is Gary B. the Chartman Smith. You can visit Gary on the web at thechartman.com, where you can register for free daily stock alerts, chart analysis, and market commentary. Listen in now as I interview the Chartman.
Mr. Smith, thanks so much for being with us on Stock Shotz today.
My pleasure.
Please tell us a little bit about what you've got going on over at thechartman.com.
Well, many people might remember that when I was with thestreet.com, I had a newsletter, and this is basically the same thing. It's broken down into a couple different sections. There's always some daily commentary where, lately I've done a lot of talking about politics and business that mesh there, and there's always a lot to talk about every day. And then I also talk about just the general kind of a macro market look. I might look at the S&P, or for tomorrow I'm looking at the Qs. Then there's another section called the daily picks, of which if people come to the site and register, there's one free pick, and then subscribers get all the rest of the picks. So that might be another 3, 4, 5 picks, both long and short, just depending on how the market goes. And then at the end of the week, free to everyone, is kind of a weekly summary and wrap-up of, what's been going on in the market, the economy, how the picks fared for the past week. So I think it's really helpful for traders. These are the same exact picks I trade every day. So, for people looking to get into trading, might know a little or even a lot about technical analysis, I think they'll find it helpful.
Oh, definitely. I've looked at the site, and it's a great resource.
Well, thank you. It's nice of you to say.
It's an honor for me to have you on the show, and I've got to ask you this: can this rally keep going? We settled with the S&P at 832 today.
Right, exactly.
Do we still have some legs?
Well, it's interesting. I guess as a trader, I've been doing this long enough, almost 20 years, that, and I said I just finished up the newsletter for tomorrow, regardless of how sunny it is every day, I always see a few clouds on the horizon. You never know with this market. It can turn on a dime, and all of a sudden you find yourself with all these longs, and the market's down 1,000 points. But all that said, I always base, when anyone is the rally going to continue, I always base it on not so much the macro chart, a look at the S&P or the Dow, but the picks I'm seeing. And if I'm still seeing new, fresh picks on the long side that have just broken out, that tells me the rally should continue. What generally happens is, as we get overbought, I don't have those as long picks, because I don't pick anything that has kind of a V-shaped pattern, if you will, essentially something overbought that's gone straight up. So the long picks start to die out, and, the market can continue up, but I think it's risky. But I'm still seeing picks. My gosh, I had, 5 yesterday in the subscriber section. For tomorrow, there's 5 that have what I think have freshly broken out to the upside, and I'm not seeing any shorts. So the short answer to your question is, I think the rally can continue.
That's excellent. We need some good news. I tell you what, I don't know how many investors have written us and say, look, I'm totally spooked out of the market. And those were kind of the buy and hold investors, maybe not necessarily the traders, but they saw their 401ks just flush down the toilet this past year. And it's scarred some people, particularly those that really didn't have a lot of experience with investing. What impact do you see all of this government printing having on the next 12 to 18 months, say?
The government actions, you mean just in general?
Yeah, just the stimulus, all of this money that's been printed into the system or being printed.
Well, you would think, the conventional wisdom is it's got to be inflationary, right?
Right.
And yet, I have one position in gold. It's not so much because I'm, an inflation bug or not an inflation bug, because it broke out, and really of all the picks, it just kind of sat there. It hasn't done anything. So gold is kind of giving mixed signals right now. Just from an economics perspective, I'm not happy with anything the current administration has done. For a variety of reasons. I guess that kind of speaks to my libertarian background. But, I don't think it's good news in general for the economy, for capitalism, for inflation. But on the flip side, I don't really care. And I don't mean to sound, kind of look down on that or just ignore the plight of many. I'm just speaking as a trader. And as a trader, all I'm looking for is a trend, to go up or down, and that's how I kind of view, my money and what I do every day.
Well, I think that's a mindset that a lot of us are having to adopt. My grandfather taught me to invest when I was 16. His philosophy, he passed away 5 years ago, and we used to have many debates. I wanted the growth stock, he wanted the dividend-paying stock, but I wish every day that I could talk to him about these markets, because for 30 years he was right with his buy and hold mentality. He did very well, but that's gone. I don't see that as really a great investment or way to make money in the coming years. But as far as these volatile swings in the market, do you think that any of the government action, if they restore the uptick rule, is there anything that you see from a legislative standpoint that will curb that volatility, or is this just the new era that we're in?
Well, let me answer that in two ways. One is if you're talking about volatility, volatility was at its highest kind of from middle of October through almost the end of December. I'm saying volatility and interchangeable with the VIX, if you will, in this case. And, the VIX right now is just above 40, which is kind of where it's almost at the low it's been since 2009. So volatility is starting to drop off. Now, in terms of the uptick rule, I don't really see the big effect of that. Honestly, I lived and traded when they had the uptick rule earlier, and my view of it was inconvenient. At worst, it was inconvenient. I mean, okay, so you got to wait for an uptick to go short. Well, big deal. I mean, with stocks trading, sometimes the spread between the bid and ask is a penny or two. So what do you have to wait, 3 or 4 seconds? I mean, it's not that big of a deal. And if you happen to miss the trade, I guess that's kind of what they're worried about, these stocks cascading down, the shorts piling on and driving it further. Well, as a trader, I missed the trade, and I just move on to the next trade. And then finally, without being too long-winded, I don't know what the uptick rule will do to those bearish direction ETFs. I guess that'd be the other way to play it. For example, the QID goes if you think the Qs are going down, you buy the QID. That's kind of shorting the Qs as an example. I don't know how the uptick rule will affect those, so I have to kind of plead ignorance on that.
Okay, but really, when you're looking at a chart, if they change the uptick rule, there's either the demand in there to buy that stock or not. So it's really what you're saying. It's really not going to affect your chart patterns that much.
No, not at all.
For the rest of this great interview, visit our website, www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.